Good morning, everyone. I welcome everyone to the day 4 session. Good morning.
Good morning, ma'am.
Morning. Thanks for your reply. I welcome everyone to the day 4 session. Good morning.
Good morning, ma'am.
Morning. Thanks for your reply. I welcome everyone to the day 4 session. So, what about the work down I gave you last previous day 3 session? It is on HR classes I gave you. I told you, you have 1 week time. So please finish your JDs and case studies result. But I never had any reply from you people. So yes, I continued the marketing and I never gave for marketing class anything. But even though the things which I gave you on HR session, it's still balance. People try to finish at least a JD which I gave you, finish it. Okay. Today, we are going to see about financial management. Today, I'm going to take a particular company balance sheet for 5 years, and we are going to discuss about the balance sheet, different type of ratios, comparison of that 5 years. So entirely, we're going to see about the current scenario and we're going to discuss. So I need everyone to participate it. So today we're going to see about Netflix company. Can anyone tell about the company, like about the Netflix? What type of a company it is? Have you all heard about Netflix? So I asked about the Netflix, what type of a company is a Netflix, but no answer. So I'll start discussing about it and we'll see about the international financing of Netflix. Okay, and here I'll be discussing about, I'll take 5 years ratio of 2020 to 2023, their current fluctuations, and what are the recent development of Netflix in their according to their performance, and the dividend policy and source finance and ratio analysis. So complete uh, ratio analysis, how we should by comparing with the balance sheet, how we have to see all this a performance. Okay, so we'll just see. Before that, I like to tell about Netflix. So Netflix is a leading entertainment company known for its streaming service, offering a wide range of TV shows like movie, documentaries, and original content. I think you people all know about Netflix for what we have been using it. Okay, it was founded in the year 1997 by Reed Hastings and Mac Randapul. Originally, Netflix operated as a DVD rental by mail service. So, before a transition of the rental service, like after it has been streaming in still 2007. So since then, it has been expanded globally and has become one of the most popular streaming platforms. With millions of subscribers worldwide, Netflix also produces its own original content known as Netflix Originals, which include award-winning series like Stranger Things, The Crown, and House of the God. So I think this is the introduction about the Netflix. Okay, here I'm going to show you. So whenever, whatever company it may be, so you can go to the particular website, their website, or we have many websites. They'll be releasing their annual reports. So today I'm going to take about the years where you'll be getting their balance sheets, records, and everything. So from their particular organization, they'll be releasing their entire annual report. So in the entire annual report, they will have a complete content. The complete content, so their business, they'll be explaining about their business segments and the competitions. So next is intellectual property and everything. So this is a risk factors. So they have given during the COVID time what they have been done. So next it is they'll be explaining each and every table of content. So they will be giving their comparison of 5-year cumulative total returns and with their consolidated statement of operations and cash flows consolidate. So each and every year we'll be getting a results with this balance sheet. Now we're going to discussing about this international finance of Netflix. Okay. So in this international finance of Netflix, the main thing I have created a I've took particular year for 5 years. So I have given an introduction. See, like I've given, like what I told you about the Netflix, I've given the same thing. So in today dynamic and interconnected global business landscape, international finance plays a very big role, as I told you, and it has a global scale business where approximately 231 million paid membership across more than 190 countries. Okay, so Netflix financial performance serves a testament to the global influence. So in 2021, the company reported a strengthening annual net income of 5.116 billion, reflecting an 84.28 increase from the preceding year from 2023. So I have given from where I have took the sources, all everything. Okay, so now we'll see the success, how they have been flexed over so far, how many years. Okay, so now we are going to discuss about the first important thing as two recent development discussion creating impact on Netflix development and performance. So one is development one, like increased competition in the streaming industry. So the competitive companies, can you tell me the competitive industry with this, which is competitive to Netflix? You can see the screen also. You can tell me one or two competitive industry like Netflix. Participants, are you there?
Yes, ma'am.
Can you please explain like I asked you about the Netflix, I don't want to put it. So I need a competitive industry which is equal to Netflix.
Good morning, ma'am.
Hotstar, Amazon Prime.
Okay.
Yeah, Hotstar, Amazon Prime, it's
Hotstar,
also.
Amazon Prime. Any other things?
We can consider the OTT platform for the universal purpose actually.
Okay.
Any OTT platform like
Oh,
Netflix, because actually I have remembered in the Amazon Prime and Hotstar only. So
oh,
this is the main two pioneering company actually. So others who OTT platform who is the in universal, who is run the universal platform. So they also considered as a competitor of Netflix.
okay. Any new entrants, new like recent of 1 or 2 years which came which competing to the Netflix new thing?
Geo TV.
Geo. Okay. Any other apart from Geo?
Can we consider the YouTube? Not, yeah.
YouTube cannot be considered
Yeah,
because
that's right, that's right.
yeah,
Paramount
there
is
must be.
also the OTT platform.
Okay, now what you people watch, like what you prefer, what you people prefer to see when you want to see OTT platform like that?
Definitely.
Hotstar.
Hotstar, yeah, Hotstar and GeoTV is the most preferable.
Okay.
Right now, IPL season, this is also showing it's free from GeoTV actually. So 25, 27
Okay.
CR public are online from GeoTV in IPL season actually. So
Amazon Prime Video, as you told. Okay. Next is Disney Plus. Have you ever gone through it? Disney
sorry.
Plus. Disney Plus. It was launched in 2019.
Oh no, actually Disney Hotstar.
No,
I'm not here about.
Disney Plus Hotstar.
Yeah. Disney Plus
Yeah,
Hotstar.
yeah.
Yeah, recently collaborated with the
So according to the survey
Disney.
from 2024 to 2019, no. So the mostly nearby competitors like Amazon Prime Video, as you people told. Next is Disney Plus. So it was launched only in 2019 only. But there is a huge response from other countries. Like for example, like National Geographical content, like Disney type of those all things. Disney Plus is there. Okay, and next Hulu. Have you ever gone through those words? So it's for TV series. TV
It's Hulu, right?
series. Yes, and
Hulu,
as you
ma'am,
told,
I don't have any clarity. Hulu is the universal
it's
OTT
owned by
platform, like
Disney. It is owned by Disney.
okay.
That's what most of people doesn't know, because the same brand has been owned by some other, running by some other name also. That's why I asked
Yes,
you. Owned by
yes,
Disney
ma'am.
only.
It's branding is important more than changing his name actually.
Yes.
Yeah,
So
ma'am.
they're offering on like TV series. and selections of TV shows, movie. Actually, Disney Plus is somewhat different. Okay, from that they have started a different name so that they are giving like TV shows, movies, and the original programming. So as you people know, HBO Max, and next is Apple TV Plus.
Yeah.
And Peacock. Have you ever heard Peacock?
Yeah, right.
That
In this
is
right
owned
now,
by.
advertising that is owned by also, I think, Hotstar. Yeah, Disney. And
It is
yeah.
NBC Universal. It's owned by
Okay.
NBC Universal.
Okay.
So it's,
Universal.
yeah, NBC Universal. It is for movie, news, sports, and the original content also.
Hmm.
Next
Yeah,
is
understood.
Paramount Plus. Actually, it is almost known as CBS.
Okay.
Normally, it's known as CBS, but it's Paramount Plus.
Yes.
So these are all the competitive to attract and retain the audience, highly competitive streaming in the market. Okay. So have you ever gone through the balance sheet before? Have you gone through any industry, company, or manufacturing unit balance sheet?
No, ma'am.
So
No.
have you ever tried where we can go get those balance sheet, those all things?
Not at all, ma'am.
Okay. See, if you think that in any particular industry that you're going to make any financial like you're going to make a case study or a report writing or report writing for 250 words, these all things, no, this will be very helpful investors. Okay, so you'll get the entire details of like particular year wise. You'll get all the annual reports. Okay, so when you go for the net investors, what are the company you think like you can see their annual reports? Okay, so here I have already opened 2020 annual reports. Again, like you can click over there and you can see the 2021 annual report where you can view their entire complete like it is like usually we say is a form 10K. Okay, so form 10K. So form 10K. So you will get the complete annual report of the 1 year. Okay, 1 year annual report. Year wise, you can get it. By having this. Yes, anyone like who I don't know who has been.
நாங்க ஹென்னா போட்டுட்டு பாட்டி பார்த்துட்டு வரோம். Bye daddy. Hello. Okay.
Hello. Okay. I think I don't know who has been unmuted it. So okay, so you'll get the entire annual report where you'll have those balance sheet of each and everything, and they'll show you the cash flows, consolidate statement of cash flows, consolidate balance sheet. Okay, so and they will give their report what they have got it, how many like sign up or paid membership, what was their cash flow, their result also they'll be giving each and everything. Okay, see here I'm showing each and every table of content, which includes here I've given the results of operations and their reports. Next is like streaming revenue. From there they've got the revenue, like country wise they've given like US and Canada and Europe, Middle East and Africa and Latin America. So where all their business is there for each and all the particular year wise, country wise, they'll be giving. So as Asia Pacific, and next see cost of revenue. So cost of revenue and its percentage. Next is marketing, say they have gone, and the same marketing say they have discussed their percentage in revenue and technology and department. So next interest expenses, interest and other income. So provision for the income tax. So provision for the income tax, and they've given the calculation part, and they've discussed about the provision for the income tax. So liquid next. So intangible asset and tangible asset, those all things, and they will be discussing entire detail of those. So with this help of the balance sheet, now I'm going to explain you. Okay. See, I have took a particular for the last 3 years, I'm going to take, that is from 2020, 2021, 2022, and 2023. So here I have took the previous year for 2020 is to know about that status also I have take, but I'll consider only 3 years and I'll explain you. Okay. So how many person know here from finance background? So no one from finance background? Okay. So here I'm going to explain about their dividend policy and finance source. So I'm going to explain about the dividend policy. So dividend policy, it's like nothing but it refers to the strategy or the approach that a company management to use, like how much of its earning it will distribute the shareholder in the form of dividend. Okay. So this policy involves decision about the frequency, timing, and amount of dividend payment. Okay, so that while I'm saying about the dividend payment, there are various types of dividend policies that the company may adopt, and it include of regular dividend, stable dividend, next is irregular dividend, and no dividend. Okay, so I think you people know what is dividend, so I don't want to explain about the dividend. So in regular dividend, like company pay the dividend to the shareholder at regular intervals. Okay, like such as quarterly or annually. The amount of dividend may remain the constant. Okay, like over a time, or it may be depending upon the company's earning and a financial performance, the amount will be differ. Okay, but the regular dividend will be of like quarterly or annually, which they have been made accordingly. Okay, so next is stable dividend is nothing but company aims to maintain a stable dividend, like through help out, like by helping of the payout ratio over a time, providing shareholder with a predictable income stream. That's what I'm not telling about their exact income stream. It's a predictable income stream. Okay. They may adjust the dividend periodically to reflect the changes in earnings. Okay. Next is irregular dividend. This dividend is not a consistent one. It's fluctuate depending on the factor like earning of cash flow fluctuation, or any of particular specific business conditions, it differs. Okay. And no dividend is some company may have an option not to pay dividend at all, like choosing instead of reinvest earning into the business according to the growth opportunities, or to reduce debt, they won't be having a dividend to pay. Okay, so almost the dividend policy, it reflects a balance sheet. By helping out of a balance sheet, the dividend policy will be reflect, and the company desire to give a reward to shareholders, and it's need to retain the earnings. Okay, for the reinvest in the business. So so automatically the dividend policy is influenced by the factors such as like company financial performance, growth prospect, capital requirement, and shareholder preference. Okay, so this dividend policy is more important for shareholder in the form of a dividend, how we are going to give. For this, what is most important is ratios. By the ratio calculation only, we can fix those dividends rates. Okay. So next is finance source. So automatically the finance source refers to the various avenues from which companies can obtain and funds to finance their operations. Okay. So like not only of operations, investments also, and for their further growth. Okay. So these sources can be broadly categorized into main types. One is internal source, next is external source. So internal source, as you know, it's like a retained earnings. So the profit that where the reinvested back into the company, like rather distributing to the shareholder as a dividend. Okay. So next from the retained earnings is very important is depreciation. So as a fund generated by a reduction from the fixed asset over a time, there will be a reinvestment. Okay. So next is sale of asset as a revenue generated from the sale of like surplus or any assets. So there will be generating of investments from there. Okay. So external sources, it's from equity financing, common stock. Like if I'm from equity financing, I can suggest a common stock, preferred stock, debit financing, bank loan, bonds. Okay. And even private equity, next is government grants, subsidies also will be included. Okay. So these all will be considering for financiers. So in this dividend policy, first we go for the dividend policy. Dividend policy and financiers in this, I like to share about gearing ratio calculation. So you people know about what is gearing ratio. So you know how many ratios are there in finance? Okay. So we have liquidity ratios, solvency ratios, profitability ratios, efficiency ratios, market value ratios, and coverage ratios, growth rate ratios. So in this, we have many ratios in these also. Okay. So in this, now we are going to discuss about gearing ratio calculation. So gearing ratio is also known about leverage ratio. It used to measure the proportions of company's capital, like that is funded by debit relative to its equity. It indicates the extent to which a company is using debt to finance and its operation and investments. So in this debt gearing ratio, we used to see about the main debt to equity ratio and debt ratio. So this is the most important thing that one they have given here. Gearing ratio is equal to total debt equity. Gearing ratio is equal to equity total debt. Okay. So like calculation of gearing ratio for the last 3 years. So I have for the year 2020. So the total debt. So when you're going for this balance sheet, you can view here. I have opened 2020. So So by help out of this annual report, we are taking the debit. How much you have got for 2020 is of total debt of 2020 is 14 and 83 billion, and equity they are not given, the data is provided. So we can say that debt is calculated from 2021 only. Okay. In 2021, they have given both total debt as well as equity. So I've given the gearing ratio, the amount is 0.974. So as I've made the calculation part and I've given it, I like to show the calculation part. So total debt divided by some Small mistake in the formula, so I'm making a correction over here. So total debt divided by total equity, we'll be getting year-wise gearing ratio calculation result. So as in 2023, it was 27.39 million and equity was 22.11 million. So I'm getting the result of 1.24 million. Okay. So in the same year of 2022, I've given of each year calculations here. Okay, next we're going for the dividend policy. In that, we're going to see about the main important theories. So as you know, like capital structure theory is an MMM theory. It's MMM and capital theories. So traditional. So Netflix here they have a theory when they're going for the gearing ratio is very low, so they are suggesting a convesting approaches. So they focus on the minimum financial risk and debt is used to continuously. Okay, so here next we'll move upon the ratio analysis, which I want to discuss with you. As first is profitability ratio, that is we say as ROCE. So it is measured. So for past 4 years, I've took for 2020. Here, I've given return capital employed. So I why we are using profitability ratios. I explain you this all, but also. Profitability ratios are used to assess the company ability to generate profit related to various factors like such as sales, assets, equity, or investments. Okay, so these ratios are very crucial, for many several reasons, like financial health assessment, comparative analysis, management evaluations, forecasting planning. Next very important one is investor decision making. So these overall profitability ratios are fundamental. Okay, it's a fundamental tool in a financial analysis and decision making, providing a valuable insights into a company's earning, potential earning or financial strength and operational efficiency. Okay, in this we are going to see the first one is written on capital employed. So always this ROC, it's used to measures the company ability to generate a returns from capital investments. It indicate the how effectively company is utilizing capital to generate a profit. So overall, we for this what all for our calculation on return on capital employed. So what all you want is operating profit and capital employed. So you have to give it in a percentage. So I've given 2020, 21, 22, and 23, 4 years operating profit calculation amount from those balance sheet, and I've given so while calculating for capital employee, you cannot calculate the entire you won't be getting a complete employee totally. What you have to do is you have to make a small calculation here, that is total non-current liability plus total asset. Okay, otherwise you have to minus the total asset minus the current liability, you will be getting the capital employed. So here I've given the calculation and I've done the calculation and I've given the total value. So by finding out a separate tier wise of total asset and current liabilities, even though you can find out each and everything in balance sheet, if you are able to collect the total asset and current liabilities. Otherwise, you can take those non-current liabilities and if you add it, you will be getting a total assets. Or if you minus the total asset with current liability, you will be getting the values. Okay, so I've given everything. So for example of 2023, for I am getting of operating, that is earning from operation is 49,502. You have to divide with the capital employed into 100%. So I have given the percentage wise values 14.61 in 2023 and 2022 it's 12.24%. And 2021 was 14.58% and 2020 is 14.54%. So while seeing this value, you will come to know by 2022, their profit has been growing. In 2020, it was went through, but in 2021, it has went in minus and they never achieved as much they were. So again, they have regained in 2022 and 2023. So I have given that a small graph also, and I have been explained the gearing ratios with each and every like financial structures, financial risk, and investor confidence. So I have explained their ROC with gearing ratio. I have compared the gearing ratio with ROC also. For each and every years, I have done it. Their negative gearing ratio, they have recovery, as I discussed, I told you, 2021 to 2022, they are just recovering their part. Again, in 2022 to 2023, they have been increasing their values. So next is profit, operating profit margin. So this is also known as operations or profit before interest and tax. So we used to say it's PIBIT. So it is a profit generated by company from its core business activities. So I'll show you the calculation part here. So just we have to know about the operating profit into 100, that is percentage, the total revenue. We'll be getting the PIBIT values. So formula of operating profit margin is operating profit divided by revenue. So I've given here divided by revenue. So we have to make the percentage. So for each and every year, as I told you, I found out all those values of operating profit and total revenues. Now I've given it in the value. I have divided the 39,280 in divided by 24,996 into, I've given it in a percentage. So we have got it as 12.15%, and each and every year we have got it. So I've made a linear options of operating profit margin. So with the values and with the graphs have been explained you. So here the explanation I've given, there is a it shows a profitability assessment in it is like a company is running efficiently in this particular years, and the financial health that is better, main suggesting cost management, overall financial health. And next, I've given about the movement. So movement is for 2020 to 23 is a numerator, and for 20 to 22 is denominator only. We can't expect as much. So what was the reason is because of the cost management. So they are able to improve in 2020 to 23 in this area. They are able to improve their profitability or cost management. Okay, but in denominator decrease wise, they're not able to judge the total revenue, and they're not able to consider the factor such as changes. They made the subscription numbers or content offering by the market dynamics. There was a problem in there, so there was a drop down, and almost there was a high margin in 2020, and 2021 was a little bit decreases, and 2022 was a further decreases, so we got a minus of 20, and almost in 2023 they have been recovered. So it was the fastest contributing in the recovery. So almost operating profit, they got a good comparative statement, and they have been recovered now. Next is gross profit margin. This gross profit margin is a financial metric that assesses the profitability of a company's, and by expressing the gross profit as a percentage of total revenue, it represents the difference between of total revenue and cost of goods sold. So the formula is gross profit divided by revenue into 100% only. Same I've given, and each and I've directly given in the formula value wise. So 57.70, almost a very good profit was there in 2023, but in 2022 it was almost down only. But they were in 2021, they were good comparative of others. So I've given a linear gross profit margin. So in 2023 to 2020, in between of these 2 years, it was a little bit less than only. So I've given the movement in each and every year, and reasons to the movement also I've discussed, like gross profit increasing insufficiently in 2020. So they got a high margin due to COVID pandemic. It was the biggest reason where everyone was watching. So there was a high profit only. There was no doubt on it. So in inventory turnover ratio, we have to take over the cost, sales, and buy average inventory. So into 365 days. So we have to convert into 365 days, and I have converted and given the in values. So this was the value they have got from 2020 to 2023. So almost has been inventory turnover has been higher only. There were no low cost towards downwards from past these years. It was keep on higher only, but except 2021. So I've done a study on this inventory turnover ratios also. So next is receivable turnover days. So receivable turnover days is for 365 days. So I have converted all the days and I've given the values and then explain it. So as you people know about the liquidity ratios, that is current ratio, and given the calculation. So for current ratio, you must calculate the current asset divided by current liabilities. So you'll be getting all those details in balance sheet. Only one thing you want to know about the calculation part, the formulas, and you automatically can see all those ratios formulas. With that, you can use this. I have used Excel sheet and I work it out the current ratios, current asset versus current liability for each and every year and given the result. And interpretation also I've given. See in this 2022 to 2023, the movement of this was there. Both the numerator was also there and it says denominator was also there. So sometimes there was an increase and denominator was also in decrease in short-term obligations. So the reasons behind this 2020 was very short-term period. So more current asset was there than current liabilities, but current ratio was decreased in 2021. It's because of the possibility due and increased expenses in changes in financial obligations. Next, in 2020 to 2023, the current ratio was increased. I've given in a point wise in 2022 was 1.17 and 2023 is 1.29. So almost there was an increase in content of current ratios, and the Netflix made they strengthen the short-term liquidity positions also. So there was a fluctuation in the current ratios to attribute the financial business operations. So by this short term and this long term for this 4 years, it was a little bit liquidity. They have make the adjustment, and almost the financial strategies was somewhat they have made the changes, made the improvement, and they have brought it into a better concern. So next is quick test ratio. Quick test ratio also I've given the main quick ratio formula was current asset minus inventories, current liabilities. So I've took all the values and got the result. So this moment was both, there was a normal, not biggest dramatic changes. It was a normal changes only. And movement also was not so bad. They got a good result in 2023, but there was a little bit changes in 2021 to 2022. But those 2022, there was a very low only. Next is interest coverage ratio. Interest coverage ratio, the ratio which we have made already in operating profit. With that, we have to divide the interest on loan, that is finance cost. So like operating profit divided by interest on loan. So we'll be getting the interest coverage amount. See, all the industries will be giving the balance sheets, cost of particular sheets and financial account only, but they won't be finding out these ratios and they will be giving that. We have to create it by our own, and it is very easy also. Why? Because we are getting all the details from balance sheets of prospected industry name, and you can take over it by help of the formulas which we have. We can make this analysis and make a report writing. So sources of I've given the literature review also from where I have took these all things. So I've given the workouts, which I've done the workouts step by step for all the ratios. So from this balance sheet of the year wise, I've given here, starting from each month end, like for example, 2021 to 2023 of for each and every quarter month, they have given the submission. From these source only, I have took all the entire values for Netflix. So comparatively of from 2020, there is a good profit as well as the dividend for the shareholders was also good. So always go to investor.com where you will get many balance sheets of respective industry and get through it. So, so the easiest thing only, you will be having all the ratios, make out all the ratios and you can find the entire result for each and every ratio analysis. So this is the international finance of Netflix. We have been discussed with the balance sheet. So today's day 4 session is getting completed with this 1 hour. So next session will be there by day 5. It will be having by next Saturday. So you'll be seeing of operations. So thank you so much. So we are getting finishing over here from this. So this is a 1 hour class. We had discussion about this balance sheet. So you'll be getting a feedback form in your WhatsApp group and you can make use of it. Give your feedback. So if you think that you want to make any comparison statement, you can go for the invested.com or particular company's website. You can download it and you can find out these ratios analysis. Okay, thank you so much. If any of you have any doubts, you can ask me by WhatsApp group. Okay, thank you so much. Thank you.
Thank you, ma'am. Thank you, ma'am.